Well, hello there, everyone. This is Mazske Finance. I hope you're doing outstanding. It is Sunday, May 29th, year 2022. Yep, May is almost finished, and happy Memorial Day to all of you. It's the Memorial Day weekend, so what are your plans? What are you doing? I'm a retired Navy myself. Both my sons are officers in the Coast Guard. And I've worked almost every military holiday during my police career. And in the Navy, sometimes I'll get off on those days, but in the police work, I worked the majority of the holidays myself. Anyway, I digress. I want to talk about one of the buzzwords that's been out there that's probably starting to fade just a bit the way everything's been going, but it is passive income. That seems like it's been a buzzword all over. Everyone and their brother is talking about passive income. How do you get passive income? All right. So first of all, to get passive income, for the majority of society, you need to work a job. That's not what you wanted to hear, is it? You need to work a job. Why do you need to work a job? You need to work a job to get a paycheck so you have money to invest in an asset that will give you positive cash flow. That could be passive income. All right. Now, in regards to real estate, that's what you hear a lot of folks talking about, passive income in real estate. But what I will say is real estate is work. You will hear a lot of YouTube channels talk about you have to put in the work. You have to put in the work. You have to find your market. You have to find your buy box. If you're self-managing, you got to learn how to do it. If you have a property manager, you still have to manage your property manager. You might have to manage contractors. You have to put in the work. So is it truly passive income? Yes and no. You can do someone like Dion from Dion Talks, and I think he says he averages something like 5 hours a week of work, and he self-manages. Okay, he's an outlier, I believe, in how good he is. Michael Zuber has said how much I can't remember off the top of my head what he spends a month, how many hours a month he does. But anyway, I digress. I'm sorry about that. But there is a little bit of work. It does take time, so it's not 100% truly passive. But it is passive because you're not getting up working the 9 to 5. Okay, so the easiest way to get started with passive income is through real estate. All right, and I'm not going to talk about on this video exactly how we do this, but if I've made videos before about if you are a working American, the majority of working Americans, if they so desire and if they become educated, can buy a rental property. All right, they have to find their market. They have to fix their money first. They have to get a good credit score. They got to have income they can back up, tax returns, like they're working a job or a bank will trust them. Is it getting harder out there? Yes, it is. The housing market's changing. From feedback I hear from lenders, they're starting to change a little bit. If we go into a recession, it's going to get even harder. For some of the new real estate investors, like, oh, I'm not topped out yet with 10 mortgages. It might get harder to get number 4 or 5 or 6 or 7. Okay, so we do have non-QM lenders out there, and there's several different ones I know about, and that's another topic for another video. So real estate is a great way to get passive income because if you learn to run your numbers, and you can watch this video up here, which is not up there yet because I don't know how to add the video up there. I have a video on running the numbers. So when you purchase a rental property, you make sure the numbers will work and that you will have positive cash flow after paying all of your expenses, your mortgage, your taxes, your insurance, your property management fees, holding money out for repairs, vacancies, and capital expenditures, paying any extra fees, any extra taxes, or cutting the grass or paying a water bill, whatever it is you got to pay. So after you pay all those bills, you want to have positive cash flow. My goal is usually to try for at least minimum $250 on a single family home. But with that being said, I'm looking at the cash on cash return, the yield, and I like to get a minimum, we'll say a little range of 12 to 15% at a minimum. My goal is 20, 25, 30, 35, 40%. That's Mazke's goal. What's your goal? We all invest in different markets. We all live in different markets, et cetera, et cetera, et cetera. All right. So moving on with passive income, there are other ways to get passive income. You can invest in the stock market and you can get dividend paying stocks. All right. Dividend paying stocks pay on average, once a quarter. They pay a dividend out. You can look for higher yield, safe dividend paying stocks. You can look at dividend aristocrats. I've talked about this in a different video. You can get, I was looking at dividend stocks last night. I'm not going to talk about who they are in this video, but I was finding some. They're one's dealing with, I think, oil pipelines, the transport of oil, and one's dealing with real estate. And they're both paying a dividend that averages about 9% a year. Okay, so 9% a year dividend, not too bad. Plus, I haven't studied the company to know the stock price. Is the stock price slowly appreciating on top of that? Okay, so that's a way. And there's other dividend paying stocks. You got the big names like the Cloroxes, the McDonald's, the Pepsi, the Coca-Cola, the McCormick Spices. They all pay a dividend. It may be 2%, 3%, 4%, 5%. So that's another way to get passive income. You invest in the stock, you own part of a company, and every quarter they can pay you. Now, if you're young, you reinvest it and buy more shares, so you build up your share count. But if you're looking just for passive income and you got a little bit of money to invest, that's another option for you. I personally like real estate better. I think real estate gives you a better bang for your buck. I think it'll give you more passive income. But let's say now you're accredited. All right, accredited in a nutshell means you either make a high enough income, which is something like $200,000 a year if you're single, $300,000 a year if you're married, for at least 2 consecutive years with the expectations that it will continue, or you have a net worth, excluding your personal residence, of at least $1 million. Okay, that's the 2 main ways that I know about to get accredited. Remember, I'm not a CPA, I'm not a financial advisor, and I'm not an attorney. Okay. All right, but if you're accredited, you have other options. You have syndications, like apartment syndications. Do your own diligence. I have not invested as of yet into any syndication. I have looked at a variety of syndications. If I ever decide to invest, I have an idea who I may go with, but then again, until I do it, I don't know. But I have seen syndications that are 8%, 10%, 12%, 50%, 19%, in those ranges on the expected returns. Okay, there's never a guarantee. Anytime with investing, there's never a guarantee. All right, but that's expected returns. All right, moving on from that, you also have, you've heard me mention it on my channel, you have oil drilling and you have mineral rights acreage. With oil drilling, there are a variety of different companies, I believe. I don't know the names of all of them, but I invest with one. And I've had a gentleman from that company on my channel. That was Tom. You can search my playlist with interviews. I'll put the video up here, except I don't know how to put the video up here. All right, sorry about that. But with oil drilling, it's risky. There's always risk. But I've said this before, it's like we're in the perfect storm right now with energy prices. We have an administration in the government, United States government, that is against it. But we have a society that is addicted to oil. And by being addicted to oil, they're going to keep buying it, putting it in their cars, putting it in their cell phones, et cetera, et cetera, et cetera. So we're at this perfect storm right now, from my perspective, with oil drilling. But there's always risk, but there's a risk and reward, right? So I'm getting a monthly check from my oil drilling company. I've been getting it now for about a year, I guess, but it started off small. I had less money in it when it first started. Started maybe $200 and $300 and $400. Then I went to $1,200, and I just got in. What did I just get in? $2,400 or something. Next month I may get in $4,000. We'll see. Because they're drilling new wells, and as they drill new wells, more oil and natural gas comes out, and oil and natural gas prices are going up. Okay. I also have mineral rights acreage. I've talked about that before on my channel. I'm starting to get monthly revenue for some of them in, and that's starting to come in. I must say, for those 2 investments, that is passive. It's truly passive. Same with syndication on apartments, I guess. It's passive because as an investor, we're not doing any work. If it's syndication on apartments, I'm not going out there rehabbing the apartment building. I'm not dealing with anything. Someone else is doing that. With the oil drilling and the mineral rights, again, I'm not doing anything. I can just sit back. Every month, I get a statement in, and every month I get revenue put into my bank account. Okay, so that's passive income. I like passive income. Personally, I feel that I have turned the corner. I'm still in that corner, but I've turned the corner. It's been financially tight for me ever since I've been here. I bought a house with a mortgage. And I've had months with my rentals, they go up and they go down, they go up and they go down. But I do have 2 houses under rehab that are getting closer. The big bucks gone out to pay for the repairs is slowing down. They're getting closer to being rented. I have another house that's a little bit of work's been done, and it's once we finish one, that one we'll finish that one up. So then those 3 houses eventually, excuse me, I'm trying not to sneeze. Those 3 houses should eventually give me some more rental income. Hopefully by July, let's say. I have another house waiting in the wings that's sitting empty right now in Indiana. Once I finish up 1 or 2 of those houses that I'm rehabbing, I'm gonna start rehabbing that one so I can get that one rented. So right now that's 4 houses I'm not getting rental income, but with 4 houses, that's one thing with real estate. There are expenses. I'm paying for lawn care, I'm paying for gas, I'm paying for electricity, I'm paying for repairs, okay? So passive income will be coming, but for the time being it's outflowing from my pocket. All right, so that's one thing with real estate. You have expenses with real estate. You run your numbers and you account for that. But if you're doing the BRRRR strategy, as I'm doing 3 times, kind of 2 times, 2.5 times, you account for that, but while it's happening, you're spending money, okay? So there's an expected return that you'll get. It's a time thing. So we're coming back to passive income. There are a variety of different ways to get passive income. All of us are individuals. We all have different ways that we want to invest. We all have different incomes to start with. I'll talk more about how to get started investing, I think, when I go live, probably on Wednesday at 7 p.m. I think that's when it'll be. But anyway, that's enough for today. Have a great day. Enjoy your holiday weekend. And Mazske is signing out.